Welcome to episode 43 of The 5-Minute Investor, the podcast where we break down stocks at the heart of two stories shaping your investing week. I'm Trevor Abbas.
And I'm Jonathan Brown. Each week, we bring one stock, one headline, and one reason investors should care.
This week, we're analyzing a pair of Canadian oil stocks with attractive long-term prospects, in contrast to the ongoing uncertainty following the U.S. attack on Venezuela, home to the world's largest oil reserves.
Venezuela is not a top 10 player in the game. It only produced just over 1 million barrels a day as of last November, and that has been cut in half since the U.S. stepped in. Compared to Canada, we produce between 4.5 to 5 million barrels a day, and the U.S. churns out 13 million. Regardless of small production, its big reserves have serious implications for the industry.
In terms of your perspective, who stands out in the Canadian oil industry?
That's Calgary-based Suncor Energy, SU on the TSX and New York Stock Exchange. It's a dominant oil sands company that is pushing the Trans Mountain Pipeline expansion, all to increase export opportunities for Canadian producers.
This sounds very promising, John, but why should it matter to investors?
Suncor faces some downside risk because U.S. control of Venezuela could eventually revive cheaper heavy crude production. Be good for us. It also increased competition for Gulf Coast refineries and pressuring Canadian oil sands pricing. However, analysts with the global trade firm Entellus, they noted that Venezuela's infrastructure would take years to rebuild at this point, though Canadian energy stocks, including Suncor, have dropped in the wake of the current U.S. operation. Things could take a while to turn around for them for the worse.
But the question of the hour is, how has Suncor stock weathered this storm thus far?
Well, despite the dip, SU stock has seen some growth in these first few weeks of the year and sits nearly 20% higher than where it was this time last year. Suncor trades at just over $20 on the TSX and over $40 in New York. The company just announced that it achieved its 2024 Investor Day performance targets one full year early, thanks to a record operational performance across both Q4 and full year 2025.
One last question for you, John. If Venezuela is so insignificant, why is the U.S. trying to capture its operations so fiercely? Why does this impact Canadian companies at all?
That's a good question. Venezuela actually tops the list of proven reserves at 303 billion barrels. But due to mismanagement at all top levels, or at least that's what the narrative rolling around is, the country has been unable or unwilling to fully capitalize. Suncor is the top stock, but Trevor dug a little deeper to find some smaller operations that present a new level of value.
While market analysts focus on potential instability for Canadian oil stocks, supposing Venezuelan supply displaces Canadian exports into the U.S., Greenfire Resources, an oil sands producer in Alberta's Athabasca region, remains on track to efficiently increase output across its long-life, low-decline portfolio.
Interesting. So I'm wondering how much oil is Canada shipping down there?
Well, though U.S. President Trump has stated that Venezuela will hand over up to 50 million barrels of oil to the U.S., the Canadian economy exported more than 4 million barrels per day south of the border in 2024. This according to data from the Canada Energy Regulator. But only about 10% of that total could be displaced over the short term by Venezuelan supply, mostly in the Gulf Coast, with billions in infrastructure investments over numerous years required for Venezuela to threaten Canada's role as the U.S.'s top energy supplier.
Well, that isn't too bleak, but is there a silver lining here?
Well, let me tell you, John, this clears the way for investors, in my opinion, to capitalize on Canadian oil companies with strong operations and pessimistic share prices prospective for a long-term holding period. Greenfire Resources presents itself as a prime candidate, sitting on 409 million barrels of oil in estimated proven and probable reserves, more than 5 times its current market capitalization, growing net income from $121.4 million in 2024 to $134.7 million over the trailing 12 months, ending Q3 2025 with $114.6 million in cash and equivalents to strategically deploy.
That settles it. Checks all the boxes. This stock must have really blown up.
Well, perplexingly, investors have soured on Greenfire Resources stock as of late, tanking it by almost 30% year over year, granting value investors an attractive thesis to run through due diligence.
Would you say Greenfire Resources' leadership team would be well equipped to continue delivering results on the income statement?
I'd say so, given that the management teams boast numerous decades of experience with steam-assisted gravity drainage, which is one of the primary methods of oil sands extraction, including tenures with the likes of MEG Energy and Canadian Natural Resources. Additionally, Greenfire's board benefits from veteran oil executives, many of which also serve on the board of the $5.7 billion market cap Strathcona Resources, one of North America's fastest-growing heavy oil producers.
As always, you can find links to the articles from today's episode in the show notes and more investing insights on stockhouse.com.
And you can find the 5-Minute Investor on Spotify, YouTube, iHeartRadio, Podbean, Stockhouse, or wherever finer podcasts are found. This podcast is produced in partnership with Suncor Energy Inc. and Greenfire Resources Limited and is intended for informational purposes only. For full disclaimer information, visit themarketonline.ca/disclaimer.